Hello and welcome to this special interview in this series where we are putting the focus completely on infrastructure. All of us Indians want great infrastructure, and joining me today is someone who's trying to do that. ABHISHEK Goel, who's the Managing Director and the Fund Manager of Neo Infra Income Opportunities Fund. I hope that I got that right, Abhishek. Thank you very
Vivek.
much. A pleasure talking to you.
Thank you so much for coming by. Pleasure to talk to you.
Yeah, and you know, when I said Indians love the word infrastructure, it's true, right? Because whenever we want to rant, whenever we are angry, we say infrastructure is bad, roads are bad, pothole, yeah, wo, you know, and then फिर हम ठीक हो जाते हैं. But the point is, you are trying to create something very innovative.
Vivek, you're right there. See, I mean, historically, if you see, our government, our municipal corporations, everywhere, India infrastructure has been an epitome of somewhere close to disaster, right? Now, wherever you go, you see electricity, not there, roads not there, water supplies disrupted, waste management, etc. Everywhere there's a problem. Now, what we are trying to do here, Vivek, is join forces along with government. Government has made a lot of moves in this, a lot of improvements in the last decade or more, and we are trying to join hands. And we are trying to say, look, if the infrastructure of the country has to improve, government has come up with so many encouraging policies. How can we kill basically two birds with a stone? Basically, first, improve the infrastructure of the country, and to make a little bit of good returns on the side, right? So wherever there is a good infrastructure, good investment opportunity, much needed investment, right? So whenever there is a investment opportunity, there's an opportunity to make money as well. And that's the two objectives that we are trying to merge and come up with this fund.
So as a fund manager, I believe you opened the fund a year ago. Yep. How have the last 12 months been for you? Are you seeing a lot of opportunities? Not asking you details of who you've closed and whatnot, but you are a close-ended fund. How's the journey been the first 1 year?
Vivek, I have been doing infrastructure for the last 17 years.
I know.
Right? In the last 1 year,
I was amazed when I saw your profile. I mean,
yeah, thank you.
You've got infrastructure, you probably dream infrastructure when you go to sleep.
Yeah, I think my wife would be quite troubled, but yes.
Because you had an enormous amount of experience in it.
Yes, indeed. But the amount of work that I've seen, and more importantly, what the journey we have seen in the last 1 year has been nothing short of astonishing. We launched the fund a year back, almost to the day a year back, and we said, yaar, 2000 crore karte hain. Chota sa fund infrastructure, I mean, infrastructure requirement is $100 billion. So, chota sa fund karenge, acha investment karenge, raise karenge. We got such a good response from investors. Today, we are almost around 1700 crores raised in just a year. On the deployment side, where we have to deploy, we've already started deploying. 400 crores already invested, done deals, committed. There is 1000 crores of deals that me and my team are working on, where everything is done. Diligence is done, handshake on valuation is done, great set of assets. We did a complete, thorough, in-depth diligence, technical, financial, legal, HR, insurance, whatnot. We didn't find any problem. That's why we're going ahead and doing the deal. But 1000 crores of deals are about to get signed.
Wow.
So if these deals go through, then 70% of our target corpus will be deployed. And that
in 1 year.
In 1 year. In 1 year. So, and by the way, when we started 1 year back, the team was all of 2 people. Today my team is in place as well. So journey has been, I don't know if you've been to a roller coaster, it just accelerates, right? It just goes. So it's been similar.
But what kind of assets are these, if you could explain that? Because the idea is that while you've got a certain set of people who've already come in, but you rightly said India's infrastructure needs, this figure that you gave, I remember was something even 20, 25 years ago, we would say that the biggest problem is the Indian government, howsoever much it wants to do, cannot fund all of the need.
Exactly.
So we need capital for infrastructure, which was probably been a theme for many years. And finally, it seems like coming into place. We've had exceptional focus on infrastructure from this government, I must say.
No, absolutely. The focus of the government has been exemplary. I mean, no government could have done more, I think. Of course, there's lots to be done. India's a large country, infrastructure requirements are huge, but government's plan is to invest $1.4 trillion in infrastructure in India, right? Now, where will this money come from, right? Government doesn't have this kind of money, banks don't have this kind of money. The money has to come from two sources. Either it comes from abroad as foreign investment, or the domestic savings themselves can actually play a very important role in this, which is what we're trying to do. So if this kind of money has to come, and infrastructure includes everything, airport, port, roads, water, waste management, power, renewable power, green hydrogen, warehousing, digital infrastructure, everything, right? Now in our fund though, we have decided to focus. We have taken the least risky sectors. By the way, they're least risky, but they're the most critical from the country's perspective. They're roads and solar power, right? Roads is the most important infrastructure that is required for any economy to grow. Same with power. It's very difficult to grow if you have power shortage in the country, right? So those are the two sectors that we have chosen, and our investments are focused on that only. Then we went ahead and we thought how to make this even lower risk for our investors. We said we will not do any under construction, right? There are people in India who are very good at construction. Let them do construction. When they are done with the construction, we'll purchase the asset from them, give them money so they can use this money and do more construction, because that's what they do best. And let us do what we do best, which is manage the asset. So no construction risk, but managing the asset is our problem, which we do. We have a team for that, but we'll not do any construction. Then we went one step more further. We said, okay, what kind of further risk can be there? Then we said, large majority, and I mean 90% of our portfolio will be only central government. So state governments, sometimes certain state governments, there is a issue of payment. Some state governments delay, थोड़े दिन बाद आ जाएगा, अगले महीने ले लीजिएगा, etc. But central government, there is no payment delay. So we went after central government projects. That's not all, Vivek. We said, और risk free करते हैं. Okay? How to do that? No risk on revenue. Roads are two types. One is toll roads. So you build the road or you manage the road, and whoever goes on the road, you collect toll. And your toll is your revenue. The risk in this is that in cases of, say, COVID or any other thing, the traffic will go up and down, and so your revenue will go up and down. We want to insulate our investors from that risk also. So we said what we will do is something called a hybrid annuity project. So government says you build a project and we get a fixed payment. It's like an annuity over 15 years. So there is no traffic risk also. We said we'll do that. So that's how we have, heavily de-risked the sector focus that we have, which is roads and solar. And by the way, those are the most critical things that the country needs as well. And in this kind of situation, because of the structuring that we do, we're able to deliver a target returns of around 20%. And 20% is IRR. So year-on-year compounding of 20% on this kind of de-risk portfolio is what we are doing. That is our business model, and that's what people are seeing. And they're seeing the value of that, which is why fundraising has been, fairly successful for us till date.
Well, that's enormous. I mean, 20% with a government-backed kind of a project, totally de-risked. I mean, that's the kind of opportunity of returns you're seeing.
Vivek, it's not, it's not extraordinary. What we are doing is not rocket science. Okay. In the last 10 years or so,
well, that's the kind of a return in equity somebody would take with a lot of risk.
With a lot of risk, right? With a lot of risk, right? But in India, what has happened in the last 10, 15 years is, we started infrastructure public-private partnerships in a big way in 2000s. Things
And there were some
went
accidents
haywire,
around
accidents
the way.
happened,
Some
exactly,
field
right?
projects didn't go through.
So everybody was coming up the maturity curve at that time. Developers also, investors also, government also. In the last 15 years, that has developed. But because of the accidents, the domestic investors got a feeling that this is an extremely risky environment. Let's not go there. Let's stay away from that. And they stayed away from that. The market, by the way, has been cornered in the last 10 years by foreign investors. Okay, so many foreign investors have come in the country, and they are doing exactly what I just explained to you. Okay, take a road, manage it properly, collect money from the government, and all that money is yours. And when you are managed it for 3-4 years, then you sell it to something like an InvIT or somebody, and you get a nice capital gains delivering a 20% return. I did that myself when I was at Global Infrastructure Partners, and it's phenomenal, but nobody hears of it. It's all foreign money. It's under the radar. They don't make news headlines and all that.
Sure.
And that's what I thought. I mean, if people coming from abroad are able to deliver this kind of returns in this kind of a risk, so on a risk reward is great, then why not give the similar opportunity to domestic players, domestic investors, I mean, and hence the fund. So it's not something unheard of. People have done it. People have done it multiple times. And that's exactly what we are looking to do. The only difference is we are doing this with domestic investors and not foreign investors.
Are you seeing a lot of potential in, so roads, thanks to the minister who was so progressive and active, we keep reading a lot about developments that are happening there, number of kilometers, new expressways. Not a day goes by when something new hasn't been launched.
True.
Tell me a little more about solar plants. I mean, that again has not just a power need, but also renewable, clean energy aspect to it. And therefore, a lot of young Indians would be very keen to hear from you the progress that is being made there. What are the kind of good stories you're seeing there?
So Vivek, solar has been kind of an unsung triumph for India. India today is 4th highest solar fleet globally.
4th highest.
4th highest. Larger than us are Japan, US and China.
Okay.
Okay. We are more than Spain, we are more than any of the European countries, Russia, whatever. We are 4th highest solar fleet in the world. So India, earlier 5-6 years back, the entire world used to point at India and say, guys, you burn coal and you are polluters and whatnot. And that's why the government came up with the solar mission.
Yeah.
And they said, we'll move slowly to green. And they delivered on the solar commitments of the country like anyone, better than most of their sectors. So I was reading a report. In the last 10 years, $78 billion of foreign money has come into solar. Today, we have 85 gigawatts of solar installed in the country. 85 gigawatts would be probably almost a fourth of total coal capacity of the country. So we are already at 25% of the coal capacity of the country. However, the generation in solar is lower because solar generates during only the day while a thermal plant can generate 24 hours. But 85 gigawatts is a lot of capacity. Last quarter, we brought 4.5 gigawatts solar online. And remember, the capacity of solar in the country is 85. In the last 1 year, we have tendered out 69 gigawatts more. So in the next 1 year, you will see almost 80% increase in solar capacity. Now that is a kind of commitment and that is a kind of growth that this sector is experiencing.
You're saying once again, largely it's the foreign investors.
Largely it's the foreign investors, absolutely. And whenever there is an investment opportunity, there's an opportunity to make money, So that is what we are doing as well. We are saying that, look, we'll go in there. Again, no construction risk. Solar construction is relatively easier, less risky, but we won't take that. We are again giving an opportunity to the developers to build a plant, sell it to us, use the money to build more. Because all these new bids that are coming need a lot of capital, and that capital is what we are freeing for them And once they have capital, then they do what they do best, which is make new plants, and that's what they're doing. So solar in the country has been an unsung hero. Not many people know, but we are doing too much work, too much hard work is being done by the Ministry of New and Renewable Energy, by organizations such as Solar Energy Corporation of India, NTPC, Railways, NHPC, etc. are all working overtime to deliver on the solar commitments of the country.
Tell me a little about InvITs. You talked about them, and I remember as a journalist, 20, 25 years, we kept hearing the word REITs, InvITs, and finally they've come, but very few people even know what after that. We know they've come, we know their regulations, but InvITs especially, because that's more connected to infrastructure. If you could give me a sense of what's really happening there, what kind of opportunities lie there.
Let me take a step back. I answer your question, Vivek. It's a good question. See, today, what is infrastructure? Okay, infrastructure is it construction? Answer is no. Infrastructure is a large asset. Okay, let's consider an airport, for example. Right? Do you see any construction happening at the airport? Mostly not. Right? But people go there. They pay the airport, the airlines come there, they pay the airport. What's the raw material of an airport? Nothing, right? It's an asset. There's only manpower. What is the operation and maintenance of an airport? Cleaning, right? Maybe maintaining the runways, making sure there are no crowds, whatnot. So infrastructure asset earns money because it is there. An airport is there. You have to use that airport if you have to fly out. Traffic, right? A port will earn money because it's there. People will come, ships will come, logistics people will come, and they'll make money by paying the port. So infrastructure is an asset which produces money just because it's there, right? There's no raw material. So if an investor wants to invest in this class of assets, what's the option he has? Today in the listed markets, there are hardly any infrastructure, pure play infrastructures available. If you buy a so-called infrastructure stock, you'll probably get construction risk associated with it because they are constructors. Or you'll get many other things like working capital issues, high leverage, things like that. But a pure play infrastructure, for example, if I
want to buy X airport,
let's say you want to buy Bombay Airport, there is no way you can get exposure to Bombay Airport, right? But InvITs give you an option to do that. InvITs mostly in the country today are into roads and solar. Okay, exactly that. If you as an investor, Vivek, want to buy a stake in a road, let's say Mumbai-Nagpur Expressway, there's no way you can get it. But through an InvIT, you can get that. Right? InvITs own operating roads. By law, they are allowed to own only operating projects, or 80% of the portfolio has to be operating. So construction risk is minimal, and they have to distribute 90% of whatever cash is earned in the system. So the distribution is high. You invest, and because people are flying on the road and government is paying money, the distributions are very high. So it's almost like a high dividend paying stock. Okay, think of some of the PSU stocks which are high dividend giving. This is 3 times that. So you invest in an InvIT, you start getting 10-11% distribution every year. 10-11% dividend or interest is paid to you. It's like better than a bond. Right? If you buy a bond, you'll probably get 6-7% of a coupon. Today, here it is 10-11%. So it's almost like a bond. The cash is generated by the infrastructure asset. It is upstreamed and distributed to the investors. So that is the overall concept of an InvIT. Okay, InvITs have become very, very popular in the country. There are around 23 of those. There are 4 REITs and 19 InvITs in the market today. Most of them are in roads. There are a couple of them in solar and transmission as well. But the idea is the same. There is an operating asset, generates cash. Whatever cash comes is generated is distributed to the investors. So investors get a stable company because assets are there and they are there for 25 years or more. They get a regular dividend yield, and they get an option to invest their capital in a safe instrument, which is different from debt. So in debt, you get a lower return. Here you get a higher return with risk similar to debt. So it becomes a very attractive investment that way, Vivek, for investors.
And what about the taxation?
Taxation on InvITs is almost like equity. So distribution is taxed in the hands of investors like in equity. And if you sell it on the exchange, you get to pay long-term capital gains tax after 1 year and short-term before 1 year. By the way, that is something that the Honorable Finance Minister has done a very good job, because before the long-term capital gains tax on InvITs and REITs used to be applicable after 3 years. Now that has reduced to 1 year after this budget. So that has made InvITs even more attractive, because now you can sell it after a year and enjoy a lower tax.
So do you see yourself, once you own all these assets, to also list and create an InvIT? Or?
Absolutely, Vivek. Absolutely, you're absolutely right. That's exactly what we intend to do. Once we have a portfolio of operating assets, we also intend to make an InvIT and give an opportunity to the domestic investors to participate in our assets. And whenever we buy assets, we do the highest level of diligence with the best of the technical advisors. Our team is there already, so they'll make sure that the assets that we buy are the best of the best, and investors can get a chance to participate in those cash flows. So we do intend to explore the InvIT option after a few years. But in the meantime, if investors want to take exposure in such assets, there are multiple InvITs listed, so they should evaluate those.
And you mentioned about you go for projects that are operational, so which means there is no question of a delay, like we see in roads.
No question. They are operational.
Date was the thing. It's got delayed by 6 months. So you
all
don't
of
touch
those
that.
issues are behind us. When we get into a project, then
They're
all of those
functioning
issues are
projects.
they are functioning projects. There's no land acquisition issue. There is no permit approval, construction delay. Some environment approvals, forest. All the issues are behind us. Plant or the project is running. Traffic is plying on the road. Then only we buy. So there's no.
The only thing is that you're bound by the regulations where the minimum ticket size is 1 crore.
Yes. So ours is
So
a AIF.
a small investor can only come in when you do your InvIT.
When we do our InvIT, yes. That's not because of us. I mean, that's how
I
the
know,
regulation
that's the
is.
regulation. That's what I mentioned here.
Yeah, that's how the regulation is.
But even that, I mean, if you see today's India, there are a lot of people with portfolios of significantly above that number. So they should probably also explore this.
Absolutely, and many of them are indeed exploring this. They're excited about the opportunity because a 20% return, 20% IRR year on year in this kind of low risky asset is something that's very attractive. Very attractive. They look at our
Attractive in any situation.
yeah, indeed.
I mean, you take out volatility, you take out risk. I mean,
our returns are
you got 225 lakh rupees sitting in bank deposits. The RBI governor won't like you saying what you're saying because you'll pull in a lot more people.
Yeah, absolutely. And our returns are completely separate from the market. The market can go up and down, global geopolitics, interest rates.
In fact, people don't come to equities largely because of volatility and the risk, right?
Yeah.
Because they perceive it as very high risk. So this is a way to own an asset without taking the risk on yourself.
Exactly.
That's wonderful talking to you, Abhishek. Thank you very much.
Vivek.
And I wish you all the best.
Thank you.
In your investing journey, in your new investing journey with Neo. Thank you very much.
Thanks for having me.